Hi, good evening. It's good to see a lot of old friends in the room today. Great meeting you after a bit of a hiatus. So as I was thinking of how to introduce the business, I was not sure whether to call it the Piramal Group's oldest business or its newest business. Why oldest? Because as you heard earlier in the day, the Piramal Group has done over 70 investments. And Mr. Piramal sometimes tests me by checking, this particular great business that we bought, guess how much I would have paid for it? And so he's bought businesses from as low as 5 to 10 crore rupees, going all the way we know about the 35,000 crore acquisition. And there is a track record of having invested in control equity, buying out businesses, in structured credit, probably the most profitable large deal done in India's history, and the one that I'm most jealous of, the Vodafone trade. And of course, there have also been growth equity investments done by the group. So there is a tremendous record stretching back 4 decades for the group having done investing. And one thing one must focus on in India, most Indian promoters are happy to buy businesses. But the skill as an investor lies in being able to create value in these investments and being willing to sell these investments and not stay married to it for the rest of your life. So that's something that the group has done with tremendous success. And the newest, because about 3 years back, the Piramal Enterprises board took a decision that over the next decade, one of the businesses in financial services which will have high growth and high profitability will be the alternatives business. So most of you in the room are investors, so let me set some context for you in terms of numbers. Globally, the alternative asset class is now at about $15 trillion. Of that $15 trillion, $2.5 trillion comprises Asia, and Asia has been growing at 18% per annum for the last decade. So it is a really high growth area for the world. Just the US, which is obviously the largest alternative asset in the market, has grown in certain pockets at more than 20% per annum. Specifically, the pocket where we are big in, which is private credit, has grown at more than 20% per annum, where the US now alone is a $1.5 trillion market. So this is a very large marketplace, and over the last 6 weeks, I have been in the US, I was in Canada, in Singapore, in Hong Kong, and most of these investors who have invested in that $2.5 trillion in Asia, no prizes for guessing, most of that money went into China. And the losses that these investors are currently sitting on, both realized and unrealized, add to between 10 to 60% of their balance sheets. That's the amount of pain that global investors are going to see over the next few quarters on their China books. So all this pension money has to find a new home, and India historically has been a modest performer. Every year we get maybe $50 to $60 billion of private capital into this country. Our own estimates suggest that this number is going to grow to $100 billion a year over the next 3 years. Annual flows of $100 billion of capital into this country. So that's the scale and size of opportunity that exists today in our marketplace. In terms of investors who have been wanting to do India and who've been sitting on the sidelines, and we were in Delhi last 3 days, the long weekend, and we had the who's who of India pitching the India story, starting with our Prime Minister, Mr. Modi, the key ministers, Mr. Amitabh Kant, telling global investors in no uncertain words, saying they were really wasting their time looking to invest in the western part of the world where all the action is here in this part of the world. So you have a lot of tailwinds where a lot of investors are sick of China. They need a way to redeploy that capital into another part of the world. And India has a good story to tell, and we have some really smart people out there telling the story. So that's the tailwind with which we are working today in this space. In terms of the total capital that we currently manage, a little over $1 billion, we expect over the next 3 to 5 years that we should be able to quadruple this capital, which is still a relatively modest market share of the $100 billion per annum number that I've told you. To be able to do this, you need deep expertise. And every time Jairam and I work in the same office, every time I see Jairam's team, it's getting bigger and bigger, and they're working with newer and newer technologies. We add few people every year, people with deep expertise and who know what they're doing and have been doing the same thing again and again and again over many years. So that's the team that we have built. Each of my partners are people who have deep expertise of having done what they are doing for more than 20 years of their lives. And in addition to the senior leadership, at ground up level, we have some of the smartest young brains in the country working for us. We have CA rank holders. We go to the top 5 IIMs in India, and we hire people on day 0, slot 0. So we have a really, really young, dynamic team for each of the strategies that we are deploying our capital into. We have 2 older funds from which we deploy capital today. The first on this page is a partnership in the performing credit strategies. This is an area where we invest debt capital into mid-market Indian companies. We had told our investors we'll generate maybe a 14-15% return on their capital. As of last quarter, we are generating a little over 17% IRR for our investors, life to date. The other strategy which we have, which we run in partnership with Bain Capital, is our turnaround strategy, where, in fact, the first deal that we invested 4 years back, and one of you in the audience reminded me of that deal today. It was a great bromine chemicals company, which was highly rated by a very reputed rating agency. The company went into default. We went in as the largest investor, largest shareholder, and largest lender, IPO'd the company 6 months back with a 40 times oversubscription at IPO, and the stock is now trading about 40% up since IPO. So those are the stories of turnaround that we have executed in our India RF business, India Resurgence Fund, and these are the two funds which have been generating above the target return for those funds. In addition to these 2 funds, we have 2 newer funds. One is where we invest in growth strategies in healthcare, pharma, financial services, and ITES. We call it our hybrid growth strategy. And we have our fund of funds, where we go ahead and invest in early stage funds, venture capital, venture debt, and niche strategies. Across this platform that we have created, we believe we can absorb a significant part of that 100 billion number that I referred to twice in my presentation. And we think for India Inc. and for mid-market India, for growth, for getting from the 3rd largest economy in the world, from the 5th largest to the 3rd largest over the next 3 to 5 years, mid-market India has a big role to play, and you need a lot of risk capital to be able to achieve that growth. And Piramal Alternatives will play a meaningful role for India to achieve those goals. Thank you.